Hello and welcome to CNBC-TV18. I'm Shireen Bhan. As India completes 75 years of her independence, it's crucial for us to reflect on the milestones of the past and also chart out a roadmap for where we wish to be when India heads towards her centenary celebrations in 2047. Over the last few months, we at CNBC-TV18, in collaboration with IIM Kozhikode, have tracked the progress across key sectors, health, education and technology, to create a list of imperatives for the future of the world's fastest growing economy, one that sets to be the most populous too. In this final episode of the special series India 2047, we aim to explore the financial services landscape as it emerges from a period of transformation into the age of finance at the click of a button. Making payments has never been easier. QR codes at every shopfront, and just last month, UPI hit a record 7 billion monthly transactions. Now, in adoption across Europe, Singapore and in at least 10 countries, the unified payments interface could soon become one of India's most prized exports. There is a growing belief that India could become the global hub of innovation in how financial services are delivered. In fact, Indian banks will have to spend $5 billion every year to meet the demands of a digital economy. That's as per a BCG report. And while this digital shift is giving us the tools to change how India spends and lends, what we also need is urgency in taking action to bridge financial inequities, to plug the credit gap for 60 million MSMEs and to increase the income for the poorest half of the population who hold just 6% of the country's wealth. Unfortunately, penetration of insurance, equities and mutual funds all stand in low single digits. So what will it take to include, secure and invest in the financial well-being for all by 2047? To address that question, joining me now on the show, Nithin Kamath, the founder and CEO of Zerodha, Saurabh Mukherjea, the founder and CEO of Marcellus, and Professor Debashis Chatterjee, Director of IIM Kozhikode. Gentlemen, appreciate you joining us here on the program. Saurabh, let me start by asking you about the journey that's been covered as far as digitalization of the banking and the financial services sector is concerned. You know, I just sort of gave a quick snapshot of some of the milestones that have been marked. But as we look at where we are today, but more importantly, the opportunities and the challenges that we need to bridge, how would you assess the journey gone by and the road ahead?
I think there are some big triumphs for us to celebrate. So let me first start by highlighting the triumphs. I think the brokerage industry, with thanks to people like Nithin at the helm, has done a tremendous job. When I came to India in 2008, there were barely, I think, 7 or 8 million demat accounts. I think that number is now close to 110, 120 million. And in a country where the middle class is supposed to be roughly, say, 200 million, so getting low-cost discount brokerage into the phones of millions of Indians, I think that's been tremendous progress. Where I think our country's had a bigger challenge is the sorts of products you were referencing, Shireen. I think mutual funds, 55 million, but largely concentrated in the big cities. Life insurance, even motor insurance, astonishingly, motor insurance penetration in India is less than 50%, which means 1 in 2 people drive around the country without adequate insurance. And I think the fundamental challenge there is cost. The cost of distributing these sorts of packaged financial products is astonishingly high. By my reckoning, an equity mutual fund, the distribution cost is 60, 70 bips. And I think that's where I think the country has a lot of work to do. Hopefully, fintech comes to our rescue. Hopefully, the banca channel gradually becomes less relevant and fintech becomes more relevant in getting Indians to access more affordable packaged financial products, basically savings products of the sort that a developing country needs.
Yeah, thanks for listing out some of the triumphs, Saurabh, but more importantly, also listing out the task at hand. And Nithin, that's where I want you to come in, because as Saurabh pointed out, perhaps it is going to have to be the fintechs to the rescue in many ways, at least to try and address some of the distribution challenges, the cost challenges that Saurabh spoke of. But I want to understand from you, Nithin, because you've always had a slightly different perspective on how large this opportunity is. I mean, are we going to see a quintupling, so to speak, of demat accounts over the next decade?
If you look at India, in terms of large numbers, the opportunity seems large, but I personally don't think it's really large in terms of how much you can grow from here, right? Because if you look at the number of people filing income tax returns, it's 5 crores. Even assuming there are 3 times of that, the audience, your target market, it potentially, it kind of extends to 15 crores. Now, for someone to be able to save, invest, forget saving, say invest into capital markets, I think you should have a certain basic income at least. I somehow feel that that number isn't more than 15 crores. I might be wrong. If I'm wrong, it's only good. But in my head, it feels like it's 15 crores. Even with the number of accounts, while the number of accounts is 10 crores, if you look at India by unique participation, in the sense how many people are actually, say, executing a trade once a year, unique is maybe 2.5 crores. And that number is probably the same for equity and even with mutual funds, maybe a little more than that, right? As in, so it's a subset of 3 crore Indians who are who are actively investing in the markets. So the penetration, while if you look at 3 crore Indians and you look at 150 crore as a population, it seems like it's just 2%. But if you look at 3 crores as a target market of 15 crores, it's almost 20%, 20-25%, which isn't too bad as such. The big opportunity is that how do you help people do better with their money, right? As in, people will stick around only if they're if they're doing better with the money, and that's the reason why they come to the capital markets in the first place. And personally, I think the big space here is really around advisory. We should be able to digitally kind of advise a person to do what's the right thing. Eventually, if you want the markets to grow, you want the existing investors to do well, right? If they keep making mistakes and keep becoming inactive, which is what has happened historically, right? As in every bull market, you see a lot of people coming in and then they disappear in 6 months, 1 year, right? So I think the opportunity is really that. I think all of us should solve for how do we make sure the users come in and they stick, for long term.
Well, that certainly has been our purpose. That's been our brand purpose for the last 20 plus years. But Saurabh, I want you to come back to the point that Nithin was making there on the size of the opportunity. But more importantly, since we are talking about bridging deficits, a lot of work has actually happened on getting basic accounts opened, on getting the banking correspondence out and so on and so forth. So what more do you believe needs to happen from a regulatory and a policy intervention point of view to try and bridge some of the deficits that we've spoken of?
Sure. So I think first let's focus on the savings side. I think there are two mind-boggling opportunities on the savings side. I think let's take the first one. By my estimate, Indian household wealth, right, all the households' wealth in India added up, is actually somewhere around $10 trillion, right? If you look at how much of that is in financial services, that is barely, I would say, 10%. Vast majority of Indian household wealth is real estate and gold. And as all of us know, those haven't been the best performing asset classes over 10, 20, 30 years. So what we are seeing in the last 5 years, Shireen, and I think this will continue for the next decade or so, we're seeing wealthy Indian households shift out of physical to financial roughly at the rate of $150 billion a year. So if you push that out a decade, we're going to see more than $1 trillion shift from physical to financial, right? So big opportunity focusing on the wealthy part of the Indian ecosystem. The second opportunity is less affluent people, right? So as we were discussing, roughly 110, perhaps, if you add up mutual funds and brokerage accounts, perhaps 150 million Indians at most actually have set up something which gives them access to savings. Roughly 400 million Indians go to work, right? 400 million Indians go to work every day. That means you got 250 million Indians who are actually not saving in any meaningful shape or form. And for them, we need a savings product. These people are also going to get old. They're going to need a pension. And this is where I think the NPS has to be ramped up. The NPS is affordable, 7, 8, 9 bips. It has to be ramped up. The people in power at PFRDA need to take steps so that NPS goes democratic and NPS gets democratized by brokers, by banks, by wealth managers. It has to be made it worthwhile for them. And I reckon if the NPS fees were ramped up from the current 9, 10 bips to 20, 25 bips, I think there'll be mass selling of NPS, and we desperately need that to get 300 million people into the savings ecosystem, right? So those are two different types of opportunities. One is a wealth opportunity, the other is a democratization of savings opportunity. Those are the biggest opportunities anywhere in the world in savings, and I think they lie right in front of us. On the lending side, The big development around UPI is I think it transforms the ability of a lender to assess the borrower's credit rating. I think soon civil credit scores will become secondary, especially for SME borrowers. The ability of the lender to monitor UPI and monitor through UPI what the inflow of income is transforms credit scoring opportunities. And I would request our regulator, RBI, to look at what can the banking system and the NBFC system do to capitalize on the way UPI transforms the ability of lenders to assess the viability of a borrower.
How do you believe that fintechs collaborating with banks, collaborating with perhaps other fintechs, how do we democratize savings and lendings? If I were to ask you to put down for us on the playbook of what the next 10 years should have in terms of imperatives, what do you believe that will be in light of the experience that you've had with Zerodha?
I see. The thing is, I think the most important thing here is selling to people why saving is important, saving and investing is important, and why maybe you need to start doing it early, right? I mean, I don't know if there's a quick fix for this, but I've been trying to peddle this idea wherever I can, saying that you should maybe introduce like financial education right in school and college, because today what happens is most people, when they complete college and they start working, they kind of pick up habits what they see in their family first, right? As in, if my father was buying gold and real estate, I would probably just start buying gold and real estate, as soon as I start making my first salary, So like there's so many people caught up in this whole thing saying that, real estate and gold somehow beats, like equities, which isn't the case, like Saurabh just said, So I think that education has to happen. See, the thing is, lending, I think, will grow on its own, it's because today all roads for most fintech for monetization is in lending. So I think, left on its own, lending, fintechs will get more and more aggressive, more and more creative, as and when you get access to more data, be it UPI, be it the account aggregator framework. I think the lending piece will grow on its own. Now, the question is, how do you get people to think about saving and investing?
And that's the perfect segue to get Professor Chatterjee into the conversation. The point that Nithin is making is that we need to create awareness. We need to create a culture that encourages and nurtures the idea of financial savings, of financial investments, and start as early as school. Why even wait till college? Professor Chatterjee, what can be done to bridge the financial literacy gap, which also is a big challenge?
Well, research at IIM Kozhikode shows that imparting financial literacy to poor consumers can translate into higher usage of finance and enhanced financial well-being. So there is a role for government, regulators, academia, as well as industry to focus on financial literacy of citizens, employees, and students. Of course, that case is valid. At the same time, digital literacy awareness is important to prosper in a digital economy and safeguard against cybercrime and digital thefts. The question is not just one of mindsets or illiteracy, it's also a question of risk appetite. So once you are not sure about a medium or method of investment, you tend to err on the side of investing on tangibles like gold and whatever. And our research is also showing us that as far as the Bank of International Settlement study goes, India has increased bank account access from 10% of the population in 2008 to more than 80% today. And technology has achieved actually in a decade what might have taken half a century with traditional growth process. So both Nithin and Saurabh are probably betting on the past too much to speculate as to what might happen in the future. I think the growth will not be incremental, it will be exponential. India also needs to foster a diversity of financial institutions, not one of a kind. A legal and regulatory framework that allows for entry of diverse institutions and applies proportionate regulation. This is very critical. And supervision tailored to their respective levels of risk is critical to reaching customers that aren't fully served by commercial banks. And facilities, the use of innovative technologies, the entry of technology-driven non-traditional institutions. Again, clear legal and regulatory framework is needed to allow for new technologies and players while also addressing the risks that arise from innovation.
Saurabh, I just want all of you to build on this bull hypothesis, the bull case hypothesis, and what you believe will be the driving pillars from 3 trillion to 5 trillion or 7 trillion or whatever the case may be. What are you going to be betting on as thematic drivers as we move up this journey from 3 trillion to 5 or 7?
So look, cost of capital is falling as households are financializing savings. By our estimate, Indian households are saving roughly $300 billion a year now, as opposed to $100 billion per annum a decade back. These are financial savings. That's clearly had a tangible impact on the cost of capital. The city Nithin lives in, Bangalore, is a sort of shining testament to how India has brought down the cost of capital, increased risk appetite, given entrepreneurs money. I think this theme will run and run and run as financialization goes deeper, as cost of capital drops, SMEs coming into business, combine that with ONDC and the ability of small businesses to take low-cost capital and take the digital infrastructure of ONDC to grow their businesses. I think these are two themes where financial inclusion, digitization, and tech collide and create exponential opportunities for small businesses. I think the second area is the fact that China is incredibly serendipitous for India. Just as our economy is taking off, the opportunities that you are referencing, Shireen, as we go through that, China is facing structural issues. I think a lot of Chinese business, a lot of business things that get done in China, smartphones, pharma, multi-trillion dollar industries potentially move to India. By our estimate, if you just take the pharma opportunity, the smartphone opportunity, and the defense opportunity, we could add another $500 billion to our GDP. So these two things come together. India has done the right things in the last 10 years. Some of our neighbors haven't, and therefore the next 10 years bode pretty well for us. They're not going to be a straight line to paradise, but I think the broad trajectory is broadly along the lines of what you are referencing Rhythm as saying.
Yeah, if it were a straight line to the finish, it would be boring, wouldn't it? And we've gotten used to having twists and turns. And while while Rhythm believes that this is a quintessential self-help story, we've also had times when we've gone through a self-goal story. So we need to balance that out. But Professor Chatterjee, that's what I want to leave us with. On the series so far, India 2047, which we've done in collaboration with IIM Kozhikode, we've really been drawing up a playbook on where things currently stand across different sectors, likely to be engines of growth, but more importantly, on what the policy as well as the corporate imperatives need to be. What would be your biggest takeaways from the conversations that we've had so far?
The biggest missing point in the conversation is women are found to be particularly responsible to and responsive to financial literacy outreach. And I think looking at your enthusiasm, Shireen, I think traditionally both women have been both at the receiving end and also in terms of financial well-being opportunities. And I think if you look at that segment as a constituency for outreach, not just technologically, but in terms of financial literacy, the dividends that will be paid will be huge. And the thing that I heard from the two very eminent specialists in this domain is that pre-independence India has never been considered a wealthy country. But I think AI analytics is bringing about a sort of cognitive shift and revolution in terms of financial literacy, awareness of need for savings. And the software launched between our years will be the new base for financial literacy and technological intervention. I also hear that wisdom is likely to be the new currency of wealth creation, particularly hearing Nithin's conservatism. I think he's dead right in terms of not being too effervescent about things based on numbers alone. Analytical and synthesizing of Saraswati and Lakshmi are very important. So we are talking about several centuries, advent of Vasco da Gama in the city of Kozhikode. I want to end with this note. And it's a very interesting story that you hear that, the Arab merchant had left a jar of gold for safe custody of the ruler of Calicut, which is Kozhikode today, saying that this was a jar of pickles. And after 12 years, he came back and found the jar intact. And so Calicut got this name called the City of Truth. And we realized that the business flourished because fundamentally, this city was considered a city that was reliable. Arab traders came, business flourished. So I think financial flow, financial literacy is nothing but amplification of values, of value and trust. These are two very important issues that we miss out. And I will finish with a conversation with D. Hawk, who defined, D. Hawk was the creator of Visa. And he said, money is nothing but human energy impulse that can be alphanumerically coded on a plastic card or a currency note and can be digitally transmitted from one continent to another. So anything that has value and trust is a bank. On that note, I would say financial institutions are custodian of value and trust, and these two very eminent young experts in the area of finance must place their bet on both value and trust. Thank you for inviting me for this.
Well, Professor Chatterjee, I think that is the apt note to not just end today's conversation, but wrap up India 2047, this very special series. Many thanks to Saurabh Mukherjee and Nithin Kamath for joining us today to take us through what you make of the India growth story, the financial services story, and more importantly, the journey that we need to cover to ensure that that aspiration that we have of becoming a $5 trillion economy is in fact realized. It's been an absolute pleasure joining you here on India 2047. From all of us here on the team, goodbye, thanks for watching, and we'll be back after a short break.